So I kind of went off on a tangent, but I think it's a really important tangent to understand the rhythm of the trading day. And after you do that, and by the way, you don't have to look at power stats and understand the rhythm of the trading day every single day. I mean, once you understand that and you have and you basically at some point will just memorize the type of pip movement you're liable to see, it's not something you have to revisit. But I think it's a really good habit to look at because it just takes a few moments. So then we get onto the Forex market pulse. Now, the Forex market pulse for me is in many ways kind of a throwback to the way I used to trade, which was focusing on futures contracts. You know, I really considered myself a futures trader for probably the first half of my career. Even though I traded some currencies in futures, and even though I traded equities quite actively, if someone asked me, what kind of trader are you? I said, yeah, I trade futures. And now I trade, obviously, Forex as well, but some of the habits and some of the knowledge that I gained from being a futures trader for so many years obviously impacted the way I look at the Forex market. And probably the greatest benefit is understanding those futures contracts, those markets that affect economies. Because a currency is a stock of a country, so understanding what affects its economy is going to help me trade how it behaves against the US dollar. Now that's most of my trading. A great degree, 90% is going to be a dollar-based majors and ComDols. I mean, if it trades against the US dollar, that's typically where my focus is at. So I don't trade a lot of your more exotic pairs. That's typically not where my attention is at, because for me, my edge comes in understanding, and the fact that I do trade the dollar index, that I watch the Dow Jones Industrial Average, that I will watch what I call the S&P 500 of commodities, the CCI index, the continuous commodity index. I'll look at crude. Here's the CL contract. These are all, except for the CCI, and obviously the Dow index. I trade the YM when I'm trading the Dow. I trade all these. I trade the dollar. I trade crude and the Dow. Okay, we can even talk about gold, but gold's a different character right now, isn't it? Because of the speculation, I don't think it's quite the fear barometer that it once was. So, looking at these markets, again, the dollar, the Dow, crude, the continuous commodity index. You can look at gold if you'd like. You can even look at copper sometimes. You know, these are, now I'm getting a little bit further away from my core, but these are all markets that will give you insight into whether or not there is expectation of growth and expansion, or whether or not there's a more pessimistic, risk-averse view of the world. One of the things that we talked about last Friday in this very room was the fact that starting off for the morning, I had a tremendous amount of risk appetite because, and my plays were all based on US dollar weakness. If any of you were here last Friday, you know I told you guys all the setups that I had in the market, that was long the cable, long the Aussie yen, and short the dollar Canada, based upon the same common thread, based upon the same thinking. And the thinking was that I had support levels in the equities market. This is the Dow Jones Industrial Average. This is the index. You can look at the YM as well. I was long the YM, which meant I was expecting the market to rally. It wasn't simply just some take on fundamentals, although the fundamentals did support what I felt was being spelled out on the charts. And that was all the expectation for the positive changes that people perceived as positive happening in Italy, and how that was going to really take some of the burden off the euro. Strength of the euro, in turn, is going to create weakness in the dollar index. Strength in the euro usually is reflective of the optimism coming across the Atlantic, and that is going to help the Dow rally. So all those things fundamentally, I believe, were coming to a head. And then from the price action, that was also confirmed. Don't take fundamentals and separate them from what you see in your charts. In other words, if I was seeing a lot of pessimism in the market, it's a really strong dollar, and pre-market a lot of weakness in the Dow, I would have said, yeah, normally the news coming from Europe would be bullish, but the market is not discounting it in that manner. So it's very important that you, once you have some sort of grip on what you think the impact of fundamentals are going to be, whether it be an economic report or whether that be a larger headline story, that you see the way in which price action is discounting that information. You must confirm it with price action. I've had times when I've read a story and looked at everything in terms of the data and what I feel the market should be thinking, and then I looked at the price action and I was 180 in the opposite direction. The market simply was not digesting it in the way that I perceived it would. So that's where, again, that price action is going to clarify all that for you. But again, Friday we talked about all that, and here Monday, as I look at the Forex market pulse, the Dow, the dollar, crude oil, continuous commodity index, you can throw gold in there. As I mentioned, you can throw copper in there. Some people will throw the WTI, West Texas Intermediate, in terms of looking at the energy market. I mean, there's a lot of different futures contracts that you could throw into the mix that have an impact on what it is the dollar might do, what it is the Dow might do, what it is, especially our Comdols, or Aussie, or Kiwi, or Canada might do. The dollar is directionless. This is just a sideways slop. Okay, but the Dow is showing that we have the uptrend. However, let's zoom in a little bit on this Dow. What's happening is, yes, we have the 12 to 2 o'clock angle of the wave, but we're starting to top out on the price action here. Notice how we're coming into levels where the selling pressure has come down and sent prices lower. So could I be looking at some exhaustion in equities? And if I am looking at exhaustion in equities, okay, here's the YM. So here's the YM here. Notice where we've topped out before, and notice where we are right now. I could probably draw a line right across that, right across some of these highs, just like that. And we could see that these levels have been resistance in the past. In fact, it probably wouldn't hurt for me to use a couple horizontal lines here just to remind myself, hey, you know what? And later on I could go back and make sure that I'm actually at the highs. But just visually, I know that I'm coming into an area where selling pressure has stalled the bullish momentum and for a short amount of time even reverse sentiment. In fact, we're seeing some weakness today, pre-market. Now, if I am going to have a weaker day in equities, that means the dollar's going to be up. We'll already take a look at how much the dollar has rallied off its kind of floor here. You know, could I draw some horizontal lines along some of the past lows in this market? You see, we're rallying up higher. So could today just kind of be a sit-back day when it comes to all the volatility that we saw last week in terms of Friday's close and the optimism we saw there? We're very light on economic data today, extremely light. So today might just be a day where we take a little bit of profit in equities, and for whatever reason, it's really looking like, according to the dollar, we're Risk is off the table. So we were very optimistic about what was happening in Italy Friday. I think some of that optimism is worn off, and a bit of a hangover, if you will, that we're seeing today. And to be quite frank, I'll probably be fairly inactive today. Only because I think there's a lot to digest, and I think the market's still going to be working on that. And for me, personally, I think I want to sit back and just kind of wait for everything to kind of settle. Because I'm not seeing a lot of clarity in terms of risk appetite or risk aversion from my Forex market pulse. And if these markets aren't moving, it's very likely that my Forex pairs are not going to be doing a lot of clear, longer-term movement. One thing I could do to adapt is focus on my 5-minute between the greens. And that certainly would be a logical thing to do once I get over to my Forex pairs. Focus on some 5-minute between the greens. Focus on those very short-term time frames in an effort to compensate for the lack of longer-term organization, which is something I do this time of year anyways. So maybe our next time we sit, I'll go through my between the greens setup in a lot of detail so you can get a better idea of what it is that I'll be doing for the remainder of this year, likely.